Sugar stocks have been proved to be quite a sweet deal for its investors. They've been moving up in the recent weeks on a brightening outlook for the commodities basket. Internationally, sugar prices have been rising, with raw sugar contract traded on the Intercontinental Exchange gained nearly 19% since April. And a similar trend has been mirrored by Indian sugar producers' stocks as well, with stocks like Balrampur Chini, Dalmia Bharat Sugar. In fact, the entire basket has been surging quite a bit, with these two names especially surge in the excess of 50% in the last 1 month. It mirrors a general uptrend seen in soft commodities, that is partly due to tightness expected on the supply side, even as demand remains relatively healthy and fears of rising inflation send investors looking for safer options. Now, on the supply front, initial trends point to a lower crop yield this year in Brazil, as Brazil's millers are expected to restrict sugar production this year, with some other key sugar producing areas like Thailand and the European Union not expected to produce higher output. The global demand supply scenario is likely to remain tight. Hence, international sugar prices have started to firm up and have crossed 16.5 cents per pound. This augurs well for India's sugar industry, which has a surplus inventory of 10.5 million tons. Also, in the sugar to ethanol mix, the share of sugar has fallen, with sugar output down 36%. If these trends continue for the rest of the season, then it is a good sign for sugar prices. Analysts at brokerage firm Elara Capital believe India's sugar industry is all set to achieve 6 million ton exports target set by the government at the start of the year on highly remunerative international prices. Forecast by UNICA of lower sugar output from Brazil has driven prices higher, and with around 55% of exports target of 6 million ton achieved by April, Elara says India's millers might look at exporting an additional 1 million ton this year. This would further reduce the carryover inventory as well. Meanwhile, at the end of January, ISMA predicted sugar output of 30.2 million tons, and as of April 30th, the industry had produced nearly 30 million tons, with 106 sugar mills still operating. The final figure will still increase by a bit, as ISMA expects most Maharashtra mills to end crushing in the next few days, while most Uttar Pradesh mills too will end operations in some time, continuing till probably the end of the month. If we assume final sugar output at around 30 to 32 million tons, that's an increase of 17% over last year's figure that was affected by lower output in Maharashtra. With healthy opening stocks at the start of the season at 10.6 million tons compared to domestic consumption needs of 25-26 million tons, normally this would have been a reason to worry. But the government support has been good for the sugar mills. They have managed to contract for exports nearly 5.5 million tons of sugar in the current season. Of this, 3.5 million tons are expected to have been exported by April end, with May expected to see another 0.8 to 1 million ton worth of exports. Government's ethanol program has also brought in a great deal of relief. Of the total 325 million litres, 303 million litres have been contracted, and 39% of the contracted amount has been supplied till April 19th. Nearly 3/4 of the raw material for this output has been through diversion of sugarcane juice and B-heavy molasses. While earnings revenue from ethanol sales is one objective, it is also safe to say that sugar oversupply is a thing of the past, as higher diversion of sugar in favor of ethanol would keep sugar production under 30 million tons. So what should investors do? While current conditions are conducive for sugar mills to report good earnings, one must keep a watch for any change in these factors, as the investor sentiment for sugar stocks tends to switch between optimism and pessimism rather swiftly.